May 3rd, 2024. Stock market often gets into moods and it'll do similar things on consecutive days. Yesterday we had, it was a different pattern today, but it was somewhat similar. Yesterday we had a sell climax on the open and then a weak channel up the rest of the day. And today we had, you could argue yesterday was a parabolic wedge too, probably was. And today we had more, it was less of a parabolic wedge and more of a normal wedge, but we essentially had a wedge on the open and then a weak channel up the rest of the day. And a lot of times, like I said, the market, when it does something one day, it'll repeat a similar pattern the following day. So that's something you should pay attention to, especially early in the week. If the market does, I don't know, create some sort of double bottom or double top on the open, and then you get a swing. Later in the week, look for that same similar pattern, and you can trade it with a little more confidence. Whenever you get a spike on the open, you should be looking for a measured move, either in the direction of the spike or the opposite direction. And today was the opposite direction, so we got a spike up, but you can see we actually got the measured move down of the spike, and that's roughly around the low of the day, or essentially where it was. Bar one, a big bear bar closing near its low. I'd say bar one, probably about a 30% chance that's you've seen the high of the day on the close of bar one. It's reasonable to sell below one whenever you get a big gap up, and then picture bar one as a big bull, or sorry, picture the gap as a giant bull bar, and bar one is essentially trying to create a bull trap, and bears will sell below bar one, hoping that it's the high of the day, but probably only about a 30% chance of it doing so or being so. I think it was reasonable, but not great. There's an 80% chance of some sort of minor reversal lasting at least 5 bars on any given day on the open. I thought any given day, bar one has a 20% chance of being the high or low of the day. But I thought the context was okay, given that we had a gap up above this neckline. And if we got a failed breakout above the neckline of this double top or double bottom, so we have double bottom, April 25th, May 2nd, with the neckline being April 29th, and we're trying to get a breakout above. So I thought if we ended up getting a failed breakout, we might retrace all the way back to yesterday's high, but not a very high probability of that. And so that's why I don't personally take trades like bar one. I used to. They actually used to be probably like my favorite trade until I realized, it almost never works. But I remember, maybe 3 years ago at this point, there was a big gap down and a big bull bar closing near its high. And we probably it was essentially like the equivalent of 6 bars that closed looking exactly like one, but they were bull bars, right? So we got basically a massive rally. And ever since that day, I just, up until, I don't know, maybe a year ago, for a couple of years, I just continuously took this kind of trade. And the reality is you just don't get the strong rally or the strong sell-off often enough to justify it. And the big problem with taking this kind of trade is, where is your stop, right? Because if you're selling below one and you have a stop above one, that's not really that great. Because a lot of times what ends up happening is it trades above one and then reverses down, because it's a limit order market, right? Trading range open expected. So you're expecting it to trade above one, but for there to be sellers above one scaling it higher. So it's probably a lot better to look to sell above one than it is to sell below one. You can either sell above one, or if you sell below one, instead of scaling it higher, you can just get out above two. Bar two, it's a high one bull bar after a big gap up. Probably an okay swing buy for a second leg up from the big gap. And that we might have to get above the high of the day at this point. Good follow through for the bulls on bar three, but to me, bar one, bar three just looks like big up, big down, big confusion to me. Follow through for the bulls on bar four, but tails on both sides. More follow through on five, but a big tail on the bottom. This really isn't all that great. You could look at bar three as essentially the spike, and then 4 and 5 as the channel. So we essentially have some sort of spike and channel. I think we might have to test back to the 4 low. And I honestly thought we were going to test back to the 2 high as well, because it was a lower probability trade. So there were some traders who sold below or sold above bar 2, betting that they could scale in higher and make money, and that was true. Bar 6, a low 1 short, but really not all that good. It's a high 1 for the bulls. They want to see a breakout above the bar and rally for some sort of measured move. But it seems to me like we're probably going to start to go sideways here. And then you get a giant outside down bar on 7. Sometimes on bar 7, there's some sort of news report. So I usually try not to trade bar 7. But these big moves can happen. I don't know what the news report was. I never looked, but something. And if you notice, when we got to the 2 high, you have to see it intra-bar. So I'll highlight the bar here. Oops. But when we got to the 2 high, we bounced. So we have this 5-limit bar highlighted, and what's the high of this? Is 514425. So if we'll look at like a 1-minute chart. we can see when we got to that price right here, we bounced. And why did we bounce? Because the bears who took that sell, selling the two VAR2 and scaling it higher, obviously are not thrilled with how the trade has gone, but they're happy to get out of their first entry at break even with a scale in profit on their second entry. However, 7, really big bar, really big risk. So probably more buyers below than sellers. Some bulls might buy, the thing about 7 is it's strong enough for 3 legs down, right? So when you get that big of a surprise, oftentimes you get 3 legs down, but it's a really big risk. So some traders might look to sell more of a 50% pullback of bar 7 rather than below it. And a lot of bulls know that. So some bulls might buy the close of 7, but they're only looking for a scalp. It's a pretty dangerous idea. So 8, bad follow through, a bull bar, but not really looking to buy anything. Bears, it's a low 1 short. Bulls, it's essentially a double bottom with 2, but a big tail on top, really not that good. Probably buyers below, probably sellers above. 9, a bear bar with a big tail on the bottom. I think 7 is going to limit the upside for a lot of the day. It's pretty unusual to get this big of a bear surprise, and then you just get a really strong rally. 10, an inside bar, a low 1 short, but I don't want to sell it. I think we're starting to form a tight trading range here. We could be forming an expanding triangle. You can see the points, the lower points are 2 and 9, and the higher points are 1 and 6, 1 and 7. So we might be forming some sort of expanding triangle. So if you're selling below 10, you're selling the bottom of an expanding triangle, and it's really not as good as it could be. 10, bad follow through for the bears, big tail on the bottom. 11, bad follow through for the bears, a big tail on the bottom, probably forming some kind of tight trading range here. 12 essentially touches the moving average, and then a big bounce. Again, to me, looks like we're forming some sort of tight trading range. I'd rather wait. 13, a big bear bar closing near its low, but I'm not selling 13. I think if you're selling the bottom of this expanding triangle, and you're just selling way too low. So I'd rather not do it. 14, it's a reversal up. I think 14 is kind of tricky. It's a wedge, essentially, 2, 12, 14, or 2, 9, 14. There's a couple different ways to look at it. But you're buying right in the middle of this tight trading range from 12 to, 12 and 13, essentially, is the highs and the lows of it. So I think it's really tricky to buy above 14. If anything, if you're buying above 14, you probably have to add on lower. It's probably the same idea with 15. You can see we're forming an expanding triangle within the expanding triangle, right? So we have this bigger expanding triangle, and then we have the smaller expanding triangle within it. This is a bit confusing. I'll just change the colors of these. But you can see we're forming the expanding triangle within the expanding triangle. So really, all that means is we're in breakout mode, and it's a pretty tight trading range. And so that's one of the reasons it's kind of hard to buy 15 is because you're buying the top of the expanding triangle. And realistically, if you're buying 15, where's your stop, right? I have the same problem that I did with 1. If you're selling here, you need to probably sell more here or just get out quickly. And if you're buying here, you probably just need to get out quickly or buy more down here. You can't buy above 15 and just let yourself get stopped out because realistically, you're selling right where more traders would be buying. I actually got to add that to my expanding triangle opens. Anyways, 16, potential bull trap near the top of the expanding triangle. Maybe an okay swing sell below 16. You want a lot of follow through if you're taking it. Lower probability trade, I would think, but you might get something to the moving average. And you're basically betting on bulls dumping, right? Bulls who bought above 14 and 15, you're betting they're going to exit. And that's exactly what happens on 17. 18, an inside bar, but you're selling right at the moving average. It's not quite an inside bar, but you're selling right at the moving average, essentially a low 1 short, and you're in the middle of a tight trading range. Ask yourself, does this move from 1 to 18 look like a bear leg in a trading range or look like a bear trend? It looks like a leg in a trading range. So you should probably treat it like a leg in a trading range. And instead of looking to sell down here, it might make more sense to look to be buying a reversal up. Kind of bad follow through on 19. You can see we've continued to find support at the moving average. There's probably buyers at the new low. And then outside down, 20 triggers above essentially the high 1 buy above 19 and then creates a second leg down 20. So I saw 20 as a second leg down for the bears, and we're now at the bottom of a trading range. 21, a failed breakout of the 18 bar range and a doji bar. So a big high 2 or a high 2 for the bulls from 17 and 21, or you could argue it's a bigger high 2, 14, 21, maybe a wedge 2, 12, 21. Regardless, we're probably going to get a couple legs sideways up here, but it's hard to want to buy above a doji bar after 5 straight bear bars. Whenever you get a failed breakout of the 18 bar range, it's better if it tests it within a couple ticks and doesn't quite trade below it. I was watching some old video of Al, and he mentioned this, so I thought I'd bring it up too. Mentioned that if you'd rather have the reversal up from like right here rather than below the low of the day, because it's more likely to lead to a stronger rally and some sort of trend if it does not quite trade below. If it does trade below and below the low of the day and does actually break out of the 18 bar range, it increases the chances that you're just going to see some sort of trading range rather than a strong trend. 22, a good bull bar, but a big tail on the top. It's good follow through if you bought above 21. 23, a big doji bar, decent for the bulls, but it's follow through for the bulls, and we have consecutive bull bars, so it's probably always in long, but it's really not all that great. You can see 21 and 23, we have an open gap. So good for the bulls. 24, a good bull bar. I think we're definitely always in long at this point. We probably, with the bull close on 23, we probably went always in long, but I would say by the close 24, definitely always in long. And then big follow through 25, but it's climactic, right? We're breaking out above this channel, 22, 23, 24. So we're probably going to have to go sideways before we get a rally. And something to notice, look at every big bull bar today, 15, 25, 29, 32, 38, 45, 50, right? What did all of them have in common? They all got bad follow through. So if you bought all those bars, or you bought a couple of them, at a certain point, you have to take a step back and say, all right, why have I taken 4 losing trades in a row? What's going on here? Like this is not what I'm expecting it to be. So why, what's going on? Because clearly I'm reading something wrong. So if you're taking all those buys and you're looking and you're noticing that pretty much every bull bar is getting bad follow through, then probably makes more sense to stop buying those highs and look to buy pullbacks instead. So climactic bar 25, probably okay to be long, but I think difficult to hold. 26 doji bar, okay for the bulls, and then disappointment bar 27. We could be still within this expanding triangle. For the bears, maybe some sort of wedge, 1, 2, 3, but I wouldn't sell below 27. It's probably a minor reversal after this really strong rally. Are you going to exit below 27 if you're long? I think you probably are, and look to buy again later. In disappointing bar 28, a high one for the bulls, 28, and you can see it triggers on 29. Or some bulls would wait to buy. If you're trading always in, maybe you'll buy above 27 instead, because there might be some bear stops there. But I'm not sure I want to buy all the way up here. The top of the channel is right here. So if you're buying above 29, you're buying right at the top of the channel, which is the 8 high. So you got a spike 7, and now we're in the channel phase. So I think it's really hard to look to buy up there. There was a lot of problems with pretty much every entry today. 30, a bear bar closing near its low. I wouldn't sell it, but I think bulls will probably get out of the longs. This channel is really tight, so I think it's hard to take shorts here. 31, an inside bar, good for the bulls, and then follow through 32, but I don't really want to buy it. It might be a wedge channel. We got a spike up to 25, and now we're starting the channel. And so the channel, 27, 30, and maybe 33. You don't know at this point, but you're buying basically at the channel line where traders are obviously paying attention to, and they're continuously selling. So I think really hard to buy above 32. 33, a bear bar closing near its low. It is a wedge, so you might expect a little more sideways to down, but I'm not taking the sell. I think that the bull channel is way too tight, and you get disappointing follow through 34. Any trader who did take the sell below 33 might have scaled in around a 50% pullback and is using the sell off on probably 35 to get out of their short around break even with a profit on their second entry. 35 or 34 is a high one entry for the bulls. They're trying to get a breakout above the wedge. Wedge breakouts are generally pretty 50-50. 36, initial breakout above the wedge, but you can see it failed, big tail. And then we traded below 36, found buyers because 3 straight bull bars in a reasonably tight bull channel. 38 was the breakout attempt above the wedge. You can see that we broke out above the channel line, 30, 33, 36, or 27, 33, 36, however you want to draw it. It's clear that 38 is trying to break out above them, but how much higher are we really going to go? I think bulls need one more good bull bar on 39. And instead, we get a bear bar closing near its low. So it's a failed breakout above the wedge. I think it's a reasonable sell 39, but are you going to, what are you looking for if you're selling 39? Are you looking for, a swing? It's kind of hard to do that because the channel up is really tight and the channel is probably going to get a second leg. So I think it's hard to take that sort of sell and look for a swing, but you might get a move to the moving average. So 40, a bit of a disappointment bar. Obviously disappointed bull, or I just phrased that wrong. Bulls who bought above 38 or about close to 38, disappointed 39 using 40. You can see to get out. and we might go a little more down here. And then the rest of the bulls, some bulls maybe held below 39, hoping, I wouldn't, but some algorithms held below 39, hoping that we were going to just basically get a trap, and we didn't get it. And that's why 41 ends up being so big, because the rest of the bulls are dumping. Why would you hold below 39? Well, 60% chance of two legs sideways to down, but 40% chance we just reverse right up through there, I think, and get some sort of trap. So 41 is bears dump or bulls dumping, so I don't think it's the best sell right at the moving average. It's probably more of a profit taking bar for the bears. 42, a reversal up, bull bar closing near its high. It's a double bottom with 35. After three straight bear bars and one really big 41 closing on its low, I think it's hard to buy above 42. So probably better to wait. 43, follow through, but big tail on top, big tail on the bottom. Not as good as it could be. 44, more follow through for the bulls, but after 39 through 41, you know that buying above 42 is a minor reversal. You might get a few legs sideways to up, but I don't think we're going to break far above the high. And, it's the same. Selling 41 is the same problem as selling 1, the same issue as buying 15. If you're selling here, you need to sell more here. If you're buying here, you need to buy more here. If you're selling here, you need to sell more here. Traders who are fading breakouts are doing very well today. So it's kind of the opposite day. You can't be selling below 40, 41 and then exiting above 39. If you're selling below 41, which I wouldn't do in the first place, but if you do it, you probably have to sell more above 49 and or above 39 and 45. It looks like a really climactic breakout attempt above this channel, 42 through 44. I'm not buying it. It does close above the 38 high, or the 38 close, which I think is pretty good for the bulls. But it closes right at the high, and it doesn't quite break out above 39. So you might look at 45 and say, oh, breakout attempt. Maybe it'll go, and maybe it will. But I would, traders who are fading breakouts are doing well today. And I'd rather wait and see the actual breakout attempt, because we haven't broken out above anything. If 45 closed above 39, then maybe it's a more credible buy, but it didn't. So I would rather wait and see what 46 looks like. If 46 looks like 45, great, buy the close, go ahead. But you don't get that. So disappointment 46, traders fade the breakout, and more disappointment 47. Probably two legs sideways down in a lower time frame with tails 46, 47. 48, a bull bar, but a big tail on the top. It triggered the high one above 47, but it's not a very good high one. It seems like the top of the trading range. 48, a low one short, but not very good. You see 48, 40, or 49 is the second leg sideways down. So 46, 47, the first leg, and 49, the second leg down for the bears. Usually expect two legs sideways down after the failed breakout. 50, a good bull bar, but doji as the high 2 entry bar above 49. So not really great to be buying. 51, disappointment, but I'm not selling 51. It's a really tight trading range. I'd rather wait. This bears, in the past 40 bars haven't really done or not 40, but 30 bars haven't really done very well selling. They've had, you could argue their stop order entries were 27. They weren't good, but they were 27, 30, or at least 30. So didn't trigger. So 27, 33, 39, 41 and 51. And 4 out of the 5 of those have failed. And pretty much any given bar has a 20% chance of being a reversal. So, you could have just done that sort of trade. You could have basically thrown a dart at a dartboard and, in that way, look for 20% chance of some sort of reversal. So really it wasn't very good to be taking any sort of, my point being that it wasn't very good to be taking any sort of sells, I think, after the early part of the day today, once we started to get the rally. 50, which bar was I on? 52, failed breakout below the tight trading range as you expect. 53, a bull bar, but I'm not buying. All the bull bars getting bad follow through. Not a great buy. 54, a third reversal down. So we have 46, 51, and 54. It's a wedge the same way this was. It's not as steep of a channel. So I still think relatively 50-50 that we get the breakout or a failure. 55 is the signal bar. Can you buy above 55? A lot of things are getting bad follow through today, so I think it's hard to do, but it's probably not unreasonable to buy above 55, taking a chance we get the breakout above the wedge. Big bull bar closing near its high 56, and then disappointment 57. Had 57 triggered, it probably would have been the best sell out of the bunch, because you're selling higher and you might get a move down to the moving average, but it's still probably a minor reversal. 58, a bull bar closing near its high. Traders bought the close of 57, trying not to let it trigger. And so we got a big bull bar 58. 59, a high one, but probably sellers above. And then disappointment 60. Bulls probably exit below 60. If they don't, then I would imagine that they get pretty disappointed 61 and they're exiting during 62. And I wouldn't trade the rest of the day. To me, this just starts to, once it starts to go sideways, 63, 64, 65, 66, I would just be done. 67, it's a wedge. 57, 63, 66, but you're buying way too high in the trading range. And you can see it would have stopped you out and then given you a chance to get out at break even. So really not that great because, again, same reason for all the trades not being that great earlier today. So more of a limit order day, kind of, I think, but really difficult day. Reasonable stop order trades, probably one, probably two, probably 14, maybe 15. But maybe I'm wrong with that one. I don't know. But it's consecutive bull bars and it broke out above this high. I thought was important, but maybe it's just part of the expanding triangle. 16 was probably a credible sell. Failed breaker of the 18 bar range. In theory, 22 was probably okay, but I'd probably rather wait for 24, 25. But really hard to be long through most of the rest of this rally. Probably 39 was okay. And then, 42 was, I don't know. I'm not buying the reversal up from the moving average after 3 straight bear bars. Might be okay because basically, close to 20 bars above the moving average. We might have to get to the new high. The 38 closes a magnet, but I'd just rather not take it. And I wouldn't take anything in here. On the daily chart, we have a breakout above the neckline of the double top or the double bottom. You can see double bottom, the 25th and May 2nd. What do bulls want? They want to measure move up of the neckline, which leads to, surprise, surprise, pretty much exactly the new high. So, that's what the bulls want, but I would say probably, 40% chance of that happening. I think we're probably going to get a rather deep pullback. We should test the May 2nd high at some point. Maybe not next week. It'll be interesting to see, basically I think the magnets are the bulls want to get to the sell climax high, which is here. The most recent sell climax high is April 15th. And then we have a bad buy signal bar here. So I think we might have to test back here. So I think the magnets, and it's also 5,100. So 5,100 and, the open of this 52.11, I think are roughly going to be the magnets of where we might get reversals if we touch those prices. On the weekly chart, you could argue this was the bear's second leg sideways to down. Some traders who sold the close were disappointed in this and used this sell-off to get out. So, what do bulls want? They want, this to be considered follow through and this to be a bear trap, and they want to continue the rally and at least get back to here or the close or a new high. But I think that the bears have done a lot of damage with how strong this is. So we're forming a trading range between probably 5,000 and the high, I would imagine. It's possible this isn't quite the high. We might have to go a little bit above it, maybe 5,400 or something. I'm not sure, but I don't see us getting to 55. It would be unlikely that would happen. So I think we're just going to form a trading range between 5,000 and somewhere up here.